Hey everyone, my name is Daniel and welcome back to another video. I hope all of you are having an absolutely phenomenal day out there. As always, here today, I'm selling a stock. And in this video, I want to talk to you all about exactly what this company is. Spoiler alert, the Tattooed Chef, exactly what's changed in my long-term thesis that has kind of led me to make this decision, which has been kind of a thought of mine for the past little while. We'll go through exactly why that is, a few reasons, going in depth into that, and exactly what I'm planning to do with the money moving forward. So if you end up enjoying this video, please consider subscribing. And with that out of the way, let's get into it here. So, before we go through anything, it's really, really important to understand that it's never a good idea to sell a stock because it's in the red, right? One of the biggest mistakes that investors make is they see a position in the red and they say, oh man, it's down 10, 20, 30%. I'm just going to sell. I'm just going to sell and I'm going to get it off my mind. Now, the reasoning behind this, kind of being a bad decision is because generally speaking, a stock going down is a discount. Now, one of the things that we have to do as investors is go out and say, is this movement downward justified? If it's not, I'm going to buy more. If it is, we have to reanalyze. And in the case of the Tattooed Chef, the stock has been pretty flat for the past year, generally speaking, but over the past month, it's been going down drastically. And we do have to highlight some of the reasonings behind this, which are linked to its most recent earnings report, and reanalyze the actual fundamentals of this company and see whether or not it's actually worth it at these prices and what's changed, which will go through my actual long-term price targets. So, first and foremost, you look at the Tattooed Chef. Again, I'm not going to go through the whole spiel of what the company does, but they're a food company, right? They're a plant-based food company making frozen meals, generally involved in the plant-based meat section, kind of that whole genre of food. And again, longer term, they have plans of expanding into much more and becoming a food conglomerate. Now, I love that story, right? And I love the company, I love what they're doing, but the actual product and business model of the Tattooed Chef doesn't concern me as much as the actual company's valuation, the numbers, and the management team, which let's go through that right now. And I want to start off with all of you, profitability. When you look at the first time I started looking at the Tattooed Chef, this is what I saw. I saw management guiding for $222 million in revenue for full year 2021, gross margins at around 20 to 25%, and assuming adjusted EBITDA of $8 to $10 million, which I said, hey, this company has had profitable adjusted EBITDA for pretty much the past few years, which again, Sam Galletti, massive experience in the food industry, and I didn't question it, right? Because they had continued profitability, and there was no reason for them to not have continued profitability. Now, what did you see as the year went by? Well, you saw both gross margins get suppressed and adjusted EBITDA go into the red. Look at their actual earnings report here. Let me actually cancel this. You'll see gross margin outlook for full year 2021 now sits at 12 to 14%. While adjusted EBITDA is expected to sit at $18 to $20 million in the negative. That's a massive, massive underperformance from this company on a profitability basis. Now, my problem is not them being unprofitable. I am happy to invest in a growth company that's spending money on marketing, on innovation to grow their top line revenue, which we'll go through in a moment. But just the fact that this company was expecting to be profitable like they had been, and all of a sudden, you can definitely blame the supply, shortage and crisis that's going on in inflation to a certain extent, but for them to miss so badly on gross margin and adjusted EBITDA makes me really, really question this company's potential to hit their long-term targets of profitability, which this company is expecting to be more profitable than even the massive companies like Tyson Foods over just the next 5 years. And that is just profitability. When you take a look at revenue, they were guiding for $222 million in revenue for full year 2022. Now you have to also keep in mind that they did end up acquiring another company, and in like Q2, they raised this guidance to right around $240 million in revenue expected for full year 2021. What is the company guiding now? Well, take a look at it. Let's go back over here. They're guiding for anywhere from $210 to $215 million. You know, it isn't that, hidden, right? It's there. This company is underperforming in a massive, massive way from the time I started to invest in them. The fundamentals have changed in a massive, massive way, and I no longer believe that this company can hit their long-term revenue targets and long-term profitability targets, which I will account for in my projections, which we'll take a look at in a moment. You look at their actual earnings report, which they just reported. Again, missed on EPS, expected right around 6 cents. They reported negative 10 cents, missing by 4 cents. Revenues, right? Reported 58.78 million, missed by 5.17 million. The growth story isn't there in revenue as much as it was expected, and in terms of profitability, I'm no longer as confident. All of these things considered, one of the things we need to do now, and we'll talk about management in a moment here, but see my long-term targets. When I originally started to cover the Tattooed Chef, this is generally what I had. I had them, I guess you could hit, I had right around $1 billion in revenue by 2025. And I expected this company to pretty much kind of beat their expectations by 2025. They had planned to hit $1 billion in revenue by 2026. I saw they were being a little bit conservative in the years 2023 to 2026. And I said, hey, I think they'll grow by more. When I look at what's going on here, I'm having doubts as to whether this company can even hit their own targets. And when you look at, again, what we have right here, which is their actual presentation, their guidance, from, again, this is what they had back then, and this is what they have constantly showed us. And, obviously gross margins and adjusted EBITDA targets have changed significantly. But, at this point, maybe by 2025, I doubt this company's hitting $1 billion. This company may very well hit closer to 800 million. And that's just following their, and again, the chart obviously wouldn't look like this. It would be maybe closer to, maybe something like this. But you got to keep in mind, revenue for this company, based off of what I've seen over the past year, is probably not going to grow as significantly as we originally thought. Now, on top of that, if it was just revenue, hey, I can deal with that. But it's also profitability. This company expected to have 20% EBITDA margins by year 2025 to 2026. That equates to potentially right around a 15% net income margin after factoring in things like taxes and interest expenses, which they don't have much debt. But factoring in those expenses, this company was expecting to hit right around 15% of profitability off of all of their revenue. Given what I've seen, I have high doubts that this company can achieve this. You look at a conglomerate in the food space, right? Conagra Brands, Conagra Foods, they make a variety of different food products. Again, a very, very similar space to the Tattooed Chef. We can actually take a look at the business overview. Again, making food, right? It's a very similar concept and company. Again, this company has gross margins of right around 28%, right? That's what they're expecting to hit, at least the Tattooed Chef. And again, we'll see if that even happens. Off of that, they've been hitting, again, this is a very solid company, pretty big track record. They've been hitting 7 to 10% net income margins, generally right around 7.5% over the past 5 years. So you go back to my model here that assumed 15% net income margins based off of what this company was telling us. And, you assume, hey, they maybe outperform Conagra, which I'm now having pretty high doubts. Even with that, you get it cut even more. Now you put all of these things together, lower growth, lower profitability. Investors may no longer want to value this company richly at a PE ratio of 20 and may choose 25 or 20 even. And the return you get on the stock goes downhill dramatically very fast, still assuming 35% growth and a net income margin of 10% with a PE ratio of 20, which is, based off of what I've been valuing my investments at this point, it's pretty reasonable. So looking at all of this, paired with, again, we had the tattooed chef literally minutes before they were going to report their actual financial results, go ahead and reschedule it. They're going to miss their reporting with the SEC in terms of their 10Q based off of their, accountants or something getting audited. It's a big mess. And I look at this company and I don't see what I saw a year ago in terms of vision, in terms of management, in terms of revenue growth, in terms of profitability. And I no longer feel comfortable holding my money here, which leads me to my next point. I'm going to start moving my position out of the tattooed chef over the next few days and next few weeks. Now, again, I'm not in a major rush to get out of here, but my plan is over, again, the next few days, next few weeks to scale out. Now, to be entirely transparent with all of you, I have my phone and my actual portfolio here. In terms of tattooed chef shares, I have 9.5% of my overall portfolio in tattooed chef shares at a cost basis of $18.50, which I'm down right around 13.7% on. So, I mean, it's up 2.2% after hours. So down right around 10% on those. In terms of options, which this could have been much worse, I'm down right around 20% on my tattooed chef options, making up around 4% of my portfolio. So tattooed chef is a major position for me, or at least it was, right around 14%. And again, the mistake I made was assuming the best when, and I've kind of taken this into account with my, again, all of my analysis moving forward is assuming more of a very conservative, almost like a worst case scenario. What happens then with the tattooed chef? I made that mistake. I won't make it moving forward, but again, I'm not down significantly and I am grateful for that. But I think the overall message to get here is that, you don't only pick winners, right? Voyager has performed phenomenally. I've been building a lot of other positions in the stock market over the past few months, and those have been doing very well, like Discovery. Hims is one that I am building, and we'll go through that in a moment. But the tattooed chef at this point just doesn't pose a good risk reward, which is why we'll start selling out. Now, in terms of where I put my money, Hims is a stock that I've been covering a ton over the past few days. This is a stock that I've been buying over the past few months, and it currently makes up around 7% of my portfolio. Now, I really want to bump this up more. Hims is in a very innovative sector, and you could argue that their product has a significantly larger moat than the tattooed chef based off of the fact that a lot of their revenue comes from subscriptions of people buying their actual products. Now, again, they are a telehealth company. They produce all of their different medications and whatnot, but let me show you a comparison with the tattooed chef real quick in terms of valuation. This is quite fascinating, and I can't spell tattooed chef. By the way, this software is linked in the description down below. I absolutely love it. You look at in terms of valuation. Let's use the next 12 months of projected revenue and divide that by their enterprise value, which factors in cash and debt. You get a 4x multiple. This company is trading at 4 times 2022 revenue, basically, right? Divided by, again, their market cap minus cash plus debt. And this has come down substantially, right? They're trading at a 4x multiple. You look at Hims, which has actually beat expectations on growth, has gross margins in the upper 70% range compared to the tattooed chef, which has right around 15%, again, gross margin, signaling that, hey, Hims, they have more potential in terms of profitability. They're growing faster, great management team, they've been executing, and on top of that, again, they've been beating expectations in terms of revenue. Hims is trading at the same multiple as the tattooed chef, which to me is kind of shocking. And again, you look at forward projections for Hims, right around 32% growth going into 2022, off of 70% growth in 2020. You look at the tattooed chef, very similar. Hims, arguably a better product in a better space, less risk of potential dominance of other companies, which, the tattooed chef, they have great products from my understanding, but, what's stopping a company like Tyson Foods or Conagra from going out and making similar products to them? So that's my piece. I like Hims, and again, I'll feel free to check out my other analysis videos on them on my channel. But this is kind of my thought process of kind of what I'm going to be doing moving forward and where I'm allocating my money. And again, I hope you kind of understand my thought process here. It isn't rushed. I've been thinking about this for quite some time, and it really has taken the events over the past few weeks to really kind of take it over that level of comfortability for me. And, I'll be selling out over the next little while for a loss of around 10%, 15%. It could have been much worse. So anyways, if you're a believer in the Tattooed Chef, all good to you. I really do hope the Tattooed Chef does phenomenally, beats expectations, and manages to do incredibly over the next few months. But I don't see it. And that's why I'm going to be scaling out. And thanks all so much for watching. I really do appreciate it. And I will see you on the next one. Bye-bye.